Hey, good morning, everyone. It looks like we have about most of our attendees present, so we're going to go ahead and get started. So I'm going to turn it over to Hunter Hill.
Hey, everybody. Sorry about that technical issue. Thanks for spending some time with us today. Looking forward to the dialogue, sharing information that we have, and we'll have a Q&A, and um, just looking forward to the opportunity to share what's going on with us and how it will affect you and your communities. We're going to record this too, so that you can have access to it later as well. But I'm just going to kick us off and introduce our team and kind of give an overview of how we got here. But the agenda is I'm going to go through how we got here again for those of you who didn't hear that last time. We're going to talk about funding limits. We're going to talk about interest rate changes. We are going to talk about how we're focusing on smaller and disadvantaged communities and how that will affect our lending, how we prioritize loans based on the fact that we have annual limits. We're going to talk about next steps, and then we're going to go into timeline and Q&A. So first, for the team that's on this call, we've got Judy Adler, and we've got Amanda Carroll, whom y'all know, and we've got Jamie Harden, who runs our financial services division. That's all of our underwriting, and that's all of our accounting. And so he's the man with the money. But y'all may not know Judy, and so I wanted to introduce her to you. She's our new leader of the Water Resources Division, and prior to joining GEFA, she served as vice president and head of global sustainability at Gap, the well-known apparel company. She also served as president of the Gap Foundation. She directed corporate strategy and operations for environmental sustainability with a focus on water stewardship and clean energy and corporate giving, and all things related to environmental policy. Prior to that, Judy served as president and senior program officer at the Turner Foundation, and she was a program manager and senior engineer at the Georgia Department of Natural Resources in the Pollution Prevention Assistance Division. And she was a project manager and engineer at Metcalf, which is now AECOM. She has her bachelor's of science degree in civil and environmental engineering from Vanderbilt and a master's degree in environmental engineering from North Carolina. So she brings a wealth of leadership and water sustainability experience, and so we're very glad to have her on the team. And for that, I want to go into some of the background about how we got here. As you all know, we've had unprecedented demand for our funds. And I think part of that was, even oddly enough, ARPA, the free money that was out there, I think had a lot of communities dusting off their plans and beginning to think, now's the time for us to execute. But that's just a hunch. But nonetheless, there was free money, and then there was unprecedented demand on our lending, and we wanted to say yes, and so we did, and we've even traditionally helped some of the larger systems, and with a larger system, it's larger projects, it's more money and higher costs, and then construction inflation, and then low interest rates, and then the federal requirements of moving principal forgiveness from 25% to 49% on their capitalization grants. And then we've had historic success for economic development around the state, which has been a great positive, but it's pulled on on all of our funds in order to meet that growing demand. And we all know that that's not changing. There's going to be continued demand. And while we were capitalized from the Georgia Fund at $250 million, the demand exceeds that, number one, and then number two, there's not a future guarantee that we'll get capitalized again. So we have to spread that money out over time. So that's how we got here. And I'm going to turn it over to Judy and Amanda Actually, I'm going to turn it over to Jamie, and we'll keep this thing moving.
Morning, everyone. Following up to what Hunter just mentioned, there was a significant decrease in interest rates, which made GEFA funding very attractive, and a high demand for water and sewer construction projects, which exacerbated GEFA's funding capacity. Now we're just taking a step back to better analyze our cash position, and therefore we have set some program limits on funding amounts based primarily on our available funding and current obligations within each program. Those limits are on an annual basis. For the Georgia Fund, $120 million. For the Clean Water State Revolving Fund, or SRF, it's $165 million. And for the Drinking Water State Revolving Fund, it's $95 million. In addition, these limits will likely change each year as we assess what we have available and determine projects that are going to be funded. Going forward, we will also have new limits per loan, with $8 million being the limit for the Georgia Fund loan, $1 million for a Georgia Fund emergency loan, and that amount actually increased from the previous $500,000 limit we had for Georgia Fund emergency loans. And then we will also have a $12 million limit on a Clean Water SRF loan and a $10 million limit on the drinking water SRF loan. Along with these changes, we are reducing the standard interest rate reduction from 50 basis points to 10 basis points and implementing a 200 basis point or a 2% add-on to the amortization interest rate during the construction phase. Please keep in mind that we are still honoring a 50 basis point reduction for Plan First Community and 100 basis points reduction for conservation and Water First projects across all programs. If you would like to be qualified for the Water First program, please contact a member of the Water Resources team. Another emphasis we are making as we return to having smaller individual loans as a priority for smaller and disadvantaged communities. As part of that, we are looking to communities to consider having a local share of their construction projects where it makes most sense. Two major components we will consider are the affordability score and the number of connections an applicant has for either water or sewer. Based on the chart presented, an applicant's affordability score can increase or decrease based on the number of connections, and the affordability score will be increased, thus giving the opportunity for GEFA to fund 100%, 75%, or 50% of the total project costs. We understand that these changes may be challenging to navigate during a period of rising costs and demand. However, we are taking the objective to be able to help as many borrowers as possible utilizing our limited resources. With that, I'll turn it over to Judy and Amanda.
Thanks, Jamie. And for everyone on the webinar, I'm really excited to be at GEFA, and I'm looking forward to working with all of you. So GEFA put out a call for projects for the Clean Water and the Drinking Water State Revolving Funds back in October of last year, and it went through January of this year. And then we put out a call for projects for the Georgia Fund, which is our state-funded fund, in April of this year. And we published the projects that submitted pre-applications in our intended use plan, our draft intended use plan, which is posted on our website. And I know I saw one of the lists of the early registrants for this webinar, and I know many of you submitted projects that are on that list. So we wanted to share this chart. The navy bars show the total projects that were submitted during those calls for projects. And then the green bars show the limits that Jamie just mentioned. We received requests in total that add up to $2.6 billion with a capital B. And as you can see from this chart, there's particularly high demand for the Drinking Water State Revolving Fund. That exceeded $1.6 billion in the recent call for projects. We wanted to share this information with you to help you understand why we need to prioritize projects moving forward that receive GEFA funding over the current year. Next slide, please. So these are the criteria that we will be using to prioritize the loans. First of all, we are going to prioritize loans that are already in process for previous board meetings, but they haven't been approved for different reasons. Typical reasons are that we're still waiting on financial audits, or the state environmental review process may not be completed yet. There are some local governments where they still need to get final approval from the mayor or the county commission. There's a number of reasons why some of these projects didn't move forward during the last board meetings. We also are going to prioritize loans that qualified for principal forgiveness, either in the intended use plan that we just published, the draft one for this year, or in previous intended use plans. And we determine principal forgiveness based on the community's affordability score, the project score, and the community's financial position. We don't have time to go into detail on how we make those calculations, the scores, but if you go to the intended use plan that's on our website, all of those details are there. We also have a webinar that's focused just on that topic that's posted on the website as well. So we also are prioritizing projects that focus on public health and environmental compliance. We work really closely with the Environmental Protection Division in making those determinations. And finally, loans for projects for economic development or projects of regional significance. A good example of economic development project is the loan that we approved last year for Bryan County for all the development around the Hyundai plant that if anyone has driven down I-16, I'm sure you have seen that facility being built. And as far as projects for regional significance, what we mean by that is projects that will benefit multiple communities, more than one county or more than one city in Georgia. And with that, I will turn it over to Amanda to talk about our federal funding cycle and next steps.
Thank you, Judy. Many of you that may have joined us on the last webinar may be familiar with this slide that I have here, but we felt that it was beneficial to include it again for anyone who wasn't on the last webinar. It kind of goes through the cycle of applying for the capitalization grant that we get every year from EPA to kind of show you, cyclically how we have to get the award and then have assistance agreements executed, and then kind of it all starts over. So we have our call for projects for the Clean Water SRF and Drinking Water SRF between October and January. And then EPA will release what they call allotments, usually around the 1st of March. And those allotments are, just what each state is predicted to get from the overall allotment that is given out through the SRF programs. And then we usually try to apply for it by June 1st. We technically have 2 years to apply for that funding, but we'd like to go ahead and apply for it so that we can have it awarded by the end of the federal fiscal year, which is September 30th. And then per the grant agreement award, the capitalization grant agreement award from EPA, we have to have signed final assistance agreements within 1 year of receipt of funds. So if we're receiving those funds on September 30th, we're accessing those funds on September 30th of 2024, we have till September 30th or October 1st of 2025 to have those assistance agreements. So that's kind of going back to the previous slide that Judy was on about why we want to prioritize those getting in, principal forgiveness on the intended use plan, as we have to have those assistance agreements and those funds allocated. It's a statutory, regulatory, and policy requirement that's put in place by EPA in our grant award. So we want to do everything possible not to jeopardize that grant award that we get every year from EPA. Next slide, please. So, you've heard everything from the panelists about the new limits, prioritization. I'd like to talk about kind of next steps, because I'm pretty sure that's what y'all are wondering about. So GEFA will use the Clean Water, Drinking Water, and Georgia Fund comprehensive list that we put on the website to create what we call a fundable list. So you have the comprehensive list, which is every single project that was submitted through the call for projects. And then we're going to put together a fundable list. And that fundable list will be a list of all projects that GEFA has deemed meet those criteria Judy discussed earlier, that will be put on that list for everybody to see. And we will have that posted by September 1st. That's our goal, to hit that. It could be earlier, but at least by September 1st, 2024, because that's when applications are due for the November board meeting. And so borrowers on that list can then begin submitting applications. And funding will be allocated first come, first served. But the project must be ready to move forward. Please don't submit an application where you have a notice to proceed that's going to be two years down the road, because we need to, like I said, we have to get the money out the door. That's an EPA requirement. And once those annual limits have been met for that fund, all submitted applications will be considered in the next fiscal year. So, they'll get on the list for the next year. Those that we were not able to fund during the state fiscal year 2025. So like I said, you'll be submitting the applications, but once we hit those limits that Jamie mentioned earlier, we won't be able to lend any more in state fiscal year 25 until the next year when the caps will begin again. Next slide, please. So here's some important upcoming dates and events that we just wanted to put out there to make sure, everybody was on the same page. The lead service line request for interests will open July 1st for the 2024 funding. Our next GEFA board meeting is August 27th, and those applications were due June 1st. So we thank everyone who had those applications in by that deadline. We'll have the state revolving fund call for projects. The drinking water and clean water will open October 1st. And then applications are due September 1st for the November 14th board meeting. GEFA will be at the Georgia Municipal Association meeting in Savannah, June 22nd through 25th. There's also the Georgia Association of Water Professionals conference in Savannah, July 14th through 17th. The Georgia Department of Community Affairs Community Development Block Grant Summit in Athens, October 7th through 10th. And then the Georgia Rural Water Association GRWA Fall Conference, October 28th through the 30th. And so that concludes our presentation, and we're just going to open it up for any questions.
All right, so we're just going to go ahead. I know there were some folks leaving some questions in the chat. If you have a question, please put it in the Q&A, and we're just going to read them in order. So the first question will be Robert Atkins. He asks, can we get copies of the slides, please?
Yeah, we got to make one edit to one of the slides. But yes.
Perfect. And I know Parker Patiski, I don't want to mispronounce his name, also asked the question early on about when can we expect the grant agreement packages to be sent out? And he is referring to the lead service line grant / loan program agreements.
I'll just say very soon. We're just getting final signatures on everything.
Perfect. And it looks like Linda McGregor has her hand up. We got multiple people with their hand up. So if you guys have a question, just throw it in the chat. If it's something that you need to talk to us about, let me know and we can certainly take you off mute. We do have a question. If a community is interested in securing a GEFA loan, is the first step submitting a request in TEH SRF call for projects when it opens October 1?
Amanda, I'll let you cover that. I think the answer is yes, but it's I'll let you add some nuance to that.
Yeah, so the answer is yes. During the call for projects is how we'll pull our fundable list that will open October 1st. The caveat to that being the SRF call for projects, the clean water is pretty open with eligible projects. The drinking water state revolving fund does have certain types of projects that cannot be funded, and that would be any economic development or future growth projects cannot be funded through the DWSRF. And those types of projects should be done under the call for projects for the Georgia Fund call for projects. And that will be opening kind of in the same time frame. We haven't figured out yet when that will be, but that's how to get on the list for funding for the next fiscal year. State fiscal year. I need to make sure I clarify federal and state.
Perfect. We have another question. Good morning. I realized there was a one-time appropriation for the Georgia Fund, but is there any indication yet that the governor may consider another year of funding since the need is so great?
I can't speak to what the governor's considering or the legislature, but we are going to make OPB and the governor's office aware of the demand so that they can make those decisions during the session.
Perfect. Another question. Will you provide recording of this webinar for those of us who arrived late?
Yeah, I think we can do that.
So that is all the questions we have right now. If there's any more questions, please put them in the chat, or if you'd like to raise your hand. If not, I'll turn it back over to the host, but I'll keep an eye on the chat for a few more seconds if there's any more questions coming in.
I would just say, if you have any thought, that I hope you'll share your question, because other people will benefit from what your question is, and we got plenty of time. So we'll wait for a few seconds, even if there's not a question.
Somebody else did ask, so the CWSRF can be used for economic development and growth projects, question mark?
That is correct, yes. It's the drinking water is very specific that it should be specifically used for public health benefit, not for future growth or economic development.
Perfect. That is all the questions right now. We can still wait a few more seconds. Oh, we got another one. If you start your project with funds you have, can you reimburse your entity if your project is approved?
So, yes, so I'm going to get into the weeds a little bit with this. So, reaching out, it's always a good idea if you even intend on using GEFA or SRF money to reach out to us to ensure that you are using, if we're going to go the SRF route, the federal, that you have to have the federal requirements in your contract documents. You are doing everything that you need in order to get reimbursed through this process. We couldn't come in the middle of a project like 50% complete and then get GEFA funding and then kind of expect reimbursement. So GEFA would need to know up front that y'all would like to use us and have this conversation to ensure that all the requirements are being met so that we can pay for any sort of upfront costs. If that's what this is, if it's talking about construction. If we're talking about engineering fees, which is, you will have before getting the GEFA loan, because there's some steps that need to happen. Yes, we will reimburse engineering invoices as long as the procurement, the A&E architectural engineering procurement requirements have been met.
And Amanda, while you were answering that, we did receive another question. I'm confused about the Georgia Fund one-time allotment that was referenced. Is there still Georgia Fund money available?
Yeah, yes, there is Georgia Fund. Oh, I know Hunter came off mute. I didn't know. Did you want to answer that, Hunter?
No, you were doing great. Go ahead.
Okay. That is correct. So that allotment was just given, or those funds were just given to GEFA. But in the slide previously that Jamie mentioned, there's that $120 million limit that is available for this FY 2025 year. So that funding is still out there. We have not hit that cap yet as far as for that funding year. Sorry if there was confusion there. I think the question earlier was going back to Judy's slide, where it was very abundantly clear that the number of projects that were submitted is up here, and then the limits are here in the funding. And someone asked, is GEFA going to go back and ask for more? So that might have been where the confusion came from. We apologize.
Two more questions that we received. If we have a GEFA loan approval for a job we have awarded a bid for, and the area of the project alters slightly, may we include that extra area into the loan?
It depends on what the area was submitted during the environmental review process that was done up front to get the loan. If it's a state revolving fund, there's the state environmental review process that has to be completed. And if that area that has gotten approved for that loan changes and wasn't part of the original submission, the borrower would have to go back to EPD to request a modification to that environmental review, that notice of no significant impact or categorical exclusion. I hope that answered the question.
The other question we received was, what are the requirements for the 25%/49% principal forgiveness?
So I assume they're referring to the grant, the capitalization grant that we are getting from EPA, where there's the requirement. So through the bipartisan infrastructure law, the amount of funding that we're getting from EPA, there's a 49% of that amount that we are required to give out in principal forgiveness or subsidy. Through just base clean water, the minimum is 20%. And then 25% through the base drinking water SRF. And all of that is in our intended use plan as far as how that's kind of been decided, as Judy spoke about earlier. And it's based on the affordability score and then the project score. And then everything with the project score is listed in the intended use plan.
We had a question about, please forgive my ignorance. So is the process basically you submit a pre-app during the call for projects period, GEFA then invites you to submit a full application, and then you submit that application ahead of a GEFA board meeting?
That is correct. The pre-application up front is more about the project itself. What's the project scope, any public health benefits to it, when is it going to start, what's the amount. The full application has that information, but it also has the financial piece to it that we have to send over to underwriting to underwrite the loan to make sure that it meets the 1.05 debt service coverage required for GEFA to take it to the board. The 2020, oh, sorry. Go ahead, Brett.
No, it's okay. When will the 2024 IUPs be approved?
So we have a public meeting for the IUPs on the 27th. And as soon as we have the public meeting, it would then be approved. It's draft because of, we have to hold a public meeting.
One thing I wanted to highlight, just to reiterate, is the slide on local share requirements based on your affordability score. That's going to be a new thing for some of you. If you have a 27 or higher score, then you'll still continue to get 100% funding for your project up to the limit. But for many of you, you could be having a $10 million project, but if your affordability score comes in where you only get 50% funding, you'll need to figure out how to get the other money to do the project through your local share or private financing in the private markets. And I'm telling you that so that you could proactively begin looking at bond financing and figuring out other ways to fund the project other than 100% financing from GEFA.
And Hunter, Jason Bodwell did request that we put that slide back up, so I was just going to scroll back and.
Well, it's got a slight typo on it. Let me see if we fixed it. Yeah, we can't repeat numbers. So it's 0 to 19, and then it's 20 to 26, and then it's 27 to 55. But I can't change the slide right now.
Yeah, that's my fault. I'm sorry. We'll change the slide before we post them.
Somebody else asked, Hunter, or how and when is your affordability score determined?
Amanda, why don't you grab that?
So the affordability score is based on metrics like median household income, decline in population, unemployment percent, and all of that is listed, all those 10 criteria, and then the point system is listed in the intended use plan, and that's all laid out as well.
One of the things I want to add to that and say thank you to this community that we're speaking to is it was highlighted to us that the affordability score alone didn't always capture it perfectly. And that's precisely why we've added this metric to essentially give you a higher score if you're serving less customers. So that's the reason we've updated this affordability score.
Awesome. Well, that is all the questions we have in the chat and Q&A. So I will turn it back over to the host.
So Sarah just asked a question.
Yes. Can you please give an explanation of secondary forgiveness?
So in the intended use plans, you'll see primary and then secondary. And so the primary is people that we're going to offer principal forgiveness first, looking at their financials. And if we have any principal forgiveness left over from that required 49% or 25% or 20%, we'll then reach out to those with the secondary on their name and ask for their information to see about awarding them principal forgiveness.
Great. Looks like there are no more questions. So I will turn it back over to y'all.
Well, thank you for joining. And obviously, we're available here to continue to answer questions and to do our best to serve your community's needs. We recognize that this is a change and that some of you very likely will not like it. And we hate that that's the case, but we've got to manage the long-term trajectory of the funds and make sure that GEFA is alive and well for many years to come. And obviously what the way these limits change is if we get more funding. And once we know we get more funding, then we will distribute more funding. Here's a question.
Yes. So does the IUP for each SRF include every community that submits a pre-app, or are those the prioritized projects?
So
go ahead, Amanda.
You can answer it, Judy.
Oh, it includes every project that we received during the pre-application process, during those call for projects.
Got another question. Are these percentages applicable to federal and Georgia fund loans?
Linda, can you clarify what percentages you're talking about? Are you talking about the principal forgiveness percentages? If that's the case, it only applies to federal.
I think she's talking about the local share.
Oh.
That's my guess.
Yeah.
And the answer would be yes. Yeah.
Percentage of project cost.
You know, I want to say this too. This is important. These are our limits that we, go to battle with, if you will. They're always subject to change. The board can change things, as we've done in the past. If we have a priority project that we need to fund, or a community that needs help in a way that our affordability score did not appropriately calculate, we're going to try to help every time, but we have to create consistency and fairness across the state. And so these are the limits, and these are the limits that we intend to honor. But as you know, economic development, regional projects of significance, and assisting communities in need is always going to be a priority for us. But the final point is, if you're a community that is a wealthier community and you do have access to private capital markets, then we are going to need you to lean into that and find those solutions in the private market.
Well, as of right now, we do not have any further questions.
Okay. Well, again, we appreciate everyone's time, and we're here. So please call us and continue to ask questions. Thank you.